I don't think it goes down 25% because there's ETFs and there's, the market is more mature. So let's say let's say 90,000. So it goes from 100 and where did it get to? 110 down to 90,000. Okay, that seems about right. So not far from where we are now. And then it finishes the year in a worst case scenario. I think it's like 200, 250. In a base case scenario, it's kind of 350. And in a blow off top cycle like 2017, back end of the year, could go north of 500,000. It's difficult to know. So I always kind of give a probabilistic tree of, these are the kinds of zones.
Raoul Pal is warning that an unprecedented change in the market may be imminent. According to the CEO and macro specialist of Real Vision, Raoul Pal, Bitcoin is ready to emerge from its recent consolidation and may rise to more than $500,000 in the upcoming years. Pal points out clear parallels to previous cycles in 2013 and 2017, indicating a significant recovery ahead, despite obstacles like the Federal Reserve's tightening and uncertainties in the global economy. Watch till the end as we dive into his bold 2025 projections, covering Bitcoin, Ethereum, and the broader economy. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Now, here's Raoul Pal with his latest macro insights.
So Bitcoin is also driven by global liquidity, but it's also the adoption of this new technology, which puts it in this stupid exponential secular trend, but with volatility. The big volatile drawdowns are just driven by liquidity. So this year, we've already established is a liquidity positive year. In fact, a very big liquidity positive year because you need to roll all of this debt. So generally speaking, it should be a very good year for cryptocurrencies. However, we're in this period where the Federal Reserve and the Treasury, and because of the dollar, have tightened liquidity over the last couple of months. It's forward looking, so it's affecting cryptocurrencies right now. So they've been soggy for a while because liquidity was tightened a while ago. But again, our expectation is it shouldn't last that long in price or time, and then we've got liquidity all the way through this cycle. Normally in these presidential election cycle years, the business cycle peaks towards the end of the year. So Bitcoin had a very complicated 2021, but what we're doing now looks very similar to the 2017 post-election for Trump. And what we saw then was ongoing injections of liquidity. We started the year with a sharp 30% correction or 25% correction, the sort of thing we're getting now. And then liquidity just came all year. And it wasn't actually massively put in by the US. It was actually China last time. And I think we might see that again this time, where China is going to play an important role in global liquidity. So I think it's going to be a much stronger year than people expect. People have a lot of PTSD from 2021, where it peaked early, then collapsed, then went back up again, then collapsed. I think it's going to look more like we saw in 2013, 2017. So yes, I remain very bullish for this year. I don't think it goes down 25% because there's ETFs and there's, the market is more mature. So let's say let's say 90,000. So it goes from 100 and where did it get to? 110 down to 90,000. Okay, that seems about right. So not far from where we are now. And then it finishes the year in a worst case scenario. I think it's like 200, 250. In a base case scenario, it's kind of 350. And in a blow off top cycle like 2017, back end of the year, could go north of 500,000. It's difficult to know. So I always kind of give a probabilistic tree of, these are the kinds of zones. However, my general construct is this year will be a good year. We will go to much higher valuations. And then after we've rolled the debt, we tend to tighten liquidity because the inflation pressures have come back somewhat. That tends to draw down the markets. We kind of reset again before we start this cycle all over again. My working hypothesis is this is going to be, valuations will get expensive this cycle. The correction may not be large, maybe just be a year of sideways, down 15% something. But the next cycle, because that's when AI, robotics, self-driving cars, missions to the Mars, all of this starts hitting, we will go to a full bubble cycle. And then we can think about what the world looks like after that. So I kind of think we're in a golden bull market. at least until the end of the decade.
Bitcoin experienced a sharp decline at the beginning of 2013, but recovered well, reaching all-time highs by the end of the year. This pattern was replicated in 2017. According to Raoul Pal, 2025 might have a similar course, with significant rises following early declines. According to him, Bitcoin may reach $200,000 in the worst-case scenario, $350,000 in the base situation, and possibly above $500,000 in the best-case surge driven by increasing adoption and liquidity. If you enjoyed this video, don't forget to like, subscribe, and hit the notification bell to stay updated on the latest insights from the world of Bitcoin and finance. Now let's turn it over to Raoul Pal for his insights on the global economy and what lies ahead.
So my job as a macro investor and analyst is to look ahead in the future and try and figure out where the world is going. I have been using a framework since 2000 of debt, deflation, and demographics. And that framework has been in play ever since. The whole world that we understand it is driven by scarcity. And generally, as we've transitioned from manufacturing economies to service economies, scarcity of knowledge is the thing. That's why lawyers get paid so much money, and accountants and financial advisors and doctors and surgeons and all of this stuff, radiologists, is because there's a short number of people, large demand for the services. AI has just made that knowledge a zero. People don't get it yet, but it's all a zero. Being a content creator, creating a media company, a zero. Making films, the cost of making a film will go from $100 million to $5 million or $2 million. So that's the cost element. On the manufacturing side, we're bringing the robots in. So what is the expensive thing of a manufacturing? It's the people. Well, you're just going to get rid of them. Okay, so we're kind of laying off a lot of jobs. Everyone understands that about AI over time, but it's offset by an aging population. So there's less people in the labor force anyway. So that is not the bit that concerns me. The bit that concerns me is, what does it mean for your business or my business when we're replaced by AI? What does it mean for financial markets when we have artificial superintelligence, ASI? Well, as investors, we're replaced because somebody can do it better than us. Somebody can do everything better than all of us. So you start thinking, well, I'm not sure how financial markets even work. Do they just, well, I don't know, because it's not going to be run by human emotion, it's going to be run by machine emotion or machine logic. Then we start thinking, well, the other thing about AI is right now we've been living this software is eating the world revolution that Mark Andreessen talked about many years ago, and the rise of SaaS software. Well, now it's pretty close already. Let's say you've built a beautiful new platform for whatever, financial advice. I can say, hey, I want to copy Jimmy's platform, but I want it for the Indian market, doing for their regulation, and it'll build it in less than a minute. So what moats do we have around our business? And what moats do we have around the fact that you and I got paid for knowledge? And that scales everywhere. So humans will find new ways of making a living. And I think the online communities is one way, because humans are social creatures by nature. So they want to be around other humans, they want to be talking to each other. But the world is going to fundamentally change in ways that we can't understand. We've never not been the top of the intellectual tree. But if you look at AI, it went last year from an IQ of 90 to a high IQ of 157. So we pretty much doubled. If we double in IQ, we get to 300 next year, which is more than any human ever recorded. And then the year after that, 600. Then the year after that, 12. I mean, this is La La Land, right? So I kind of thought about this and thought, with the exponential change that's coming in all of this technology, even longevity increases for humanity as genetic sciences use this and nanotechnology, is that we don't understand what the world is. And so when I come into a process of massive change, it's going to create societal disruption, it's going to create enormous opportunity, but in ways we don't yet know. The answer for me is, if they still have to continue to roll the debt and debase the currency and drive asset prices up, let's use this opportunity to make as much money as possible, that when we go into the early 2030s and the world is starting to move in ways we don't understand, where the study of economics doesn't even really work anymore, that we'll be secure. Because it's much easier to do it from a place of security, because we don't even know how our businesses will work in that environment. So that level of unknowing is too much for most people to deal with stress. But we've been given the greatest macro risk-taking opportunity of all time, which has been particularly within technology and crypto, because these are tech adoption curves that are playing into the trend of us being replaced by the AI. So we're investing in our own demise. We can make an extraordinary amount of money out of it. Yes, there'll be cycles and they'll come with risks and all of that stuff. But it will set us up in a place that we can deal with change.
According to Raoul Pal, 2025 will probably follow a similar path, with large gains replacing early corrections. Pal anticipates a longer upward cycle in the upcoming phase, powered by technological improvements like artificial intelligence, robotics, and space exploration, even though the market may have a minor sideways movement or a 15% reversal this year. As AI and automation continue to transform industries, he views this as a component of a golden bull market that may continue until the end of the decade, with valuations rising higher. Raoul also discusses his long-standing concept of demography and debt deflation, arguing that knowledge is the new scarce resource as countries move from manufacturing to service-based models. This relationship is being rapidly changed by AI, which drastically lowers costs by automating knowledge-based tasks. However, as robots may eventually outsmart and make better decisions than humans, this change raises questions about the future of employment, financial markets, and enterprises. Raoul thinks that in this new environment, people will have to adjust and come up with new methods to earn a living, and online communities could be one such approach. With its rapidly expanding capabilities, artificial intelligence is poised to upend society in ways that are yet beyond our current comprehension. Despite these doubts, Raoul sees a lot of potential, especially in the fields of technology and cryptocurrencies, where the quick uptake could result in significant wealth accumulation. Despite the risks, as investors, we are uniquely positioned to benefit from these developments, setting ourselves up for success in an uncertain future. And as always, happy investing.